from around the world. This is Kyle Ellicott, your host for another edition of VC TV. We're excited to have you back here at the end of the week to talk about one of our important topics that we've come to discuss here on VC TV, and that is investments and pivots during this time that we're all living, and specifically around fintech and blockchain. Two technologies that are very impactful for this next wave of digital transformation that we're going through in every part of our lives. And I am joined by an outstanding panel that I am going to try my hardest to not geek out about from around the world of investors, experts in the space, and everything in between. In addition, we have a few outstanding startups who will be presenting and sharing their projects with us in the second half of the show. We are live, so if you do have any questions, comments, concerns, answers, anything, feel free to drop them in the chat. We'll try to flag them as they come up. If not, we'll save them to the end. And a very quick shout out to Elena and to the entire LA Token team for making this all happen, doing everything behind the scenes, and making sure this all runs smoothly. So we couldn't be more appreciative of that. Thank you guys. And so without further ado, I do want to kick this off. We've got a lot to talk about. There's a lot happening in this space. A ton of things just happened in the past 24 hours, and I'm really excited to dive in. So without further ado, I want to introduce each and every one of our speakers, make sure they get a chance for you to get to know them, to connect with them afterwards if you're either building a project or looking for investment and the like. So without further ado, Brady Bunch style, Jesse, welcome to the show. We're excited to have you. If you could give us a quick introduction and kind of how you got into the fintech, blockchain, and investment space.
Yeah, absolutely. I'm Jesse Proudman, longtime entrepreneur. Started my last company in 2003. It was a cloud computing company called Blue Box. Raised about 22 million in venture, and then sold that company to IBM in 2015. Spent about 2.5 years at IBM. Last year and a half working as a distinguished engineer with the IBM Ventures Group, looking at launching an accelerator program focused on blockchain. So 2017, my job was to research the space. I've followed along the space for a long time. Nick Carey from blockchain.com and Eric Voorhees from Shapeshift were both in my college class. So we kind of watched over their shoulders as they built their companies. But 2017 was the first year I really had an opportunity to dive in. So concluded at that point, towards the end of the year, that this was a fascinating space, one that really reminded me of the internet circa 97, and that I wanted to build something new here. And so launched Strix Leviathan in January of 18.
I love it. I'm super excited. I'm holding back on so many things right there, but welcome to the show. Again, pleasure to have you. Joshia, welcome to the show as well. If you could, a quick background, and guys, make sure when I call on you, you may be on mute, so double check that mute button before you start.
Hi guys, Joshia here from Dymon Asia Ventures. I'm part of an early stage investor in primarily fintech, anything fintech, insurtech in Southeast Asia space. So we primarily focus on early stage Series C or pre-A all the way to Series B stage investments. Have been investing since 2016. That was when I first got my hands dirty into blockchain, crypto, fintech specifically. We focus a lot on anything within the credit space, the insurance space, and anything to do with asset and wealth capital markets. So that's my area of focus. Happy to be here.
Awesome, welcome. And a man that I believe probably doesn't need an introduction, but I'm going to have him give it anyways. Miko, welcome to the show. A quick intro for everybody and how you got into the space.
Yeah, absolutely. So my name's Miko, and I'm actually sort of a co-founder with Evercoin Exchange. Excited to be here. I'm also an investor and general partner with Gumi Cryptos Capital, which is a venture fund focused on early stage blockchain opportunities. I've been in this space for, I'm not as actually quite as OG, but I've been in open source software for quite a long time. About 25 years, and I've been in Silicon Valley for a bit longer than that. So definitely Silicon Valley OG, open source OG, and Bitcoin enthusiast as well as a blockchain type person. So excited to be here.
Awesome, and I believe we have another OG on the panel today who I'll get to in just a second. Chris, welcome to the show. Thank you for joining us. Same thing, quick background and how you got into the space.
My background is coming from the Chicago futures and options exchanges, where I've been for about 40 years with agency businesses. We owned one that we founded in the 80s and sold in 2007 to a publicly traded company, and we kept the proprietary trading, which is mostly what I've been doing on the traditional futures and options exchanges for about the last 15 years. And 2.5 years ago, we started dabbling around and trading Bitcoin. And at the end of 2019, just this last December, we got rid of all of those traditional businesses and closed down the introducing broker that we had and all of the regulation approvals that we had. We closed all those down to just focus on making markets and crypto. And so now we make money 3 ways. We manage the inventory, which is oftentimes the spot against the derivatives. We run algorithms and sort of HFT style with doing arbitrage with all the different exchanges. And then we make markets and stream prices to counterparties. And we're of the belief that market making on a peer-to-peer basis is going to be a big growth area, as people are going to need price for their various assets. And so instead of just Bitcoin, it'll go to a lot of altcoins and other coins and other assets. And so we believe there's a huge amount of growth to come in the market making space.
I love it. Excited to dive deeper into that. And next up, Jeremy, pardon me. I want to welcome you back to the show. It's a pleasure to have you again. A quick introduction for everybody.
Kyle, thanks for having me back. I am with Stonegate. We are a global fund administrator specific to alternative investment vehicles, hedge funds, venture funds, private equity, commodity pools, a lot of family offices, but particular forte in blockchain and crypto. So we work with blockchain and crypto funds all over the world. Other side of the shop is Stonegate Digital Capital, which is an evergreen multifamily office.
Wonderful. And again, welcome back. Dave Edwards, since we have a Dave and a David. So Dave, love the shirt, first off, and second, welcome to the show. Quick intro.
Thanks a lot. Yeah, I'm dreaming of travel again. A quick background, I spent time on Wall Street as a research analyst at Morgan Stanley, as a venture capitalist at CRV. And I also, on the other side of the world, I spent time running a whole bunch of products at Apple. And so I bring those two sort of combined things together in the modern world. The last 5 years been really focused on AI. Co-founded a company called Sonder Scheme. We work with large companies to get them going on AI, and we work as a venture studio with startups. Currently working on projects in fintech and marketing analytics and a sports app. Everything that's, for us, the common thread and behind the scenes is AI. Recently looked at some interesting blockchain AI combos, which is really interesting. So I'm always on the hunt for those.
Awesome. Excited again to dive into that. Next, David, welcome to the show.
Hello, how are you?
Doing well.
Good. I'm an insurance professional. Couple of things. I'm part of a family office in Asia Pacific. We do Series A, B, and C across Asia for fintech and insurtech. I got into the space through Guardtime, where I was one of the founding members of Guardtime in Estonia. And recently we built out InsureWave, which was one of the first the first commercial blockchain in production with Maersk. So I've been involved in the blockchain space for quite some time now. So combination of both blockchain and the investment side.
Wonderful. And another individual who doesn't need an introduction, and one of the original OGs, so the OOG in this space, and a good friend, I'd like to welcome Alex to the show. Pleasure to have you. Quick introduction for those who may not be familiar with you.
Sure, thanks for the invite. And so I'm a serial entrepreneur. Did 8 startups as a founder. So I should be put in mandatory retirement. But I really got excited about the blockchain. Originally, I was actually anti-Bitcoin. I didn't believe that thing could scale. It was like it's gonna need all the electricity on the planet to mine the last Bitcoin. But and after Mangox, I got convinced that this is the real thing, and started helping companies and investing, and really focused on launching Celsius Network in 2017 as a mechanism or a way to get adoption and mass adoption, because I feel that's our biggest problem is, very tight knit group of hodlers that are kind of holding all the coins, but unless you bring 1 billion people to this thing, it's not gonna do anything that it's supposed to do. So we at Celsius Network are focused on interest income, generating interest for people. We have 106,000 users. 90% of them are coming to us just to earn 4, 5, 8% on their digital assets. And we generate the yield by rehypothecating the Bitcoin or Ethereum to, now it's about 260 institutions around the world, mostly exchanges and large hedge funds or investment firms. And we just announced our numbers. We did just over $8.2 billion in loan origination in just under 2 years.
Wow, congratulations. Some big numbers. Again, pleasure to
More
have
than
you.
all the other guys put together. And we paid 14 million in interest, mostly in BTC and ETH to all these people. So definitely more than the entire DeFi community put together.
We're going to get into DeFi, so hold that thought right there. Last but not least, I'd like to welcome our last speaker and another guest. Glad to see back on the show. Jean, are you there?
Yes, hi. Hey, how are you guys? Thank you for the invite again. I'm holding my newborn with me, so sorry if there's little screams going on during my intervention. But yeah, former option trader, become a structured credit banker, and moved into entrepreneur. Started a couple of data science company back in early mid 2000, and then moved to the investment side. Started a fund, became venture partner with a bunch of other individuals, and these days advising 2-3 big family office in the $1 billion range, investing in fintech, early stage and late stage. And since I'm not a big fan of the banking system, I'm trying to find a way to have the Bitcoin or the crypto move more aggressively to get rid of all those redundancy and paperwork I don't like to do. That's what I'm doing.
I don't think anyone likes to do paperwork, so we're all with you. And again, welcome everybody. Thank you so much for taking the time to be a part of the show and to share with our audience your thoughts. So let's dive in. You all have a ton of different experience, but all come collectively towards the value and the potential of this industry, and that being both fintech and what blockchain technology can provide furthermore to enhance it or to do something different. And I kind of just want to figure out what's happening in the world right now. I gave a presentation yesterday for about an hour and a half and crashed Miko's presentation the day before, and got a little bit of a sense that, there is a ton of stuff that's really happening. And while we may be in the first inning of some areas of this, others are seeing a much more dramatic effect. So when it comes to fintech and blockchain, in your thoughts, where are we with these industries, and has the recent pandemic and situation at hand accelerated them and their adoption, or maybe slowed in certain areas? So Jesse, I want to start with you, if we could, kind of your thoughts on what's happening, and give our audience a perspective from what you're seeing and what they can expect.
Yeah, I think we come at this from a bit of a contrarian perspective, since we're not taking equity positions in companies in this space. So Strix Leviathan is a quantitative hedge fund. We believe that most of the assets in at least the cryptocurrency space, the tokens themselves, the currencies, Bitcoin, et cetera, are predominantly or exclusively speculatory instruments that fundamental value or fundamental valuation models sort of don't exist amongst market participants. And so effectively, price is determined by market sentiment. And so we've kind of watched over the last year. I think obviously 2017 was such an insane period of time for this industry, and it drove a lot of external interest. And then 2018 and 2019 crushed so much of the spirit of those new market participants. And we've had this concurrent drumbeat that sort of the institutional money is coming and that will save the industry, combined with sort of the stock to flow, the halving narrative, saying that with the halving that just recently occurred, that we'll see sort of this subsequent significant rise in Bitcoin price, which will sort of reinvigorate the industry. We don't believe in any of that. We're working on a research paper right now that stock to flow from a statistical perspective is not a valid model. And so from our eyes, I think we're about to see sort of this expectation meets reality moment over the coming months. Obviously, there is a lot of interest in this space. Certainly, the Paul Tudor Jones article over the last couple of weeks is indicative of new market participants sort of thinking about how to use these assets as part of their broader portfolio. And I think that's great. But I think we often this industry lives in its own echo chamber and really likes to sort of promote these narratives that don't actually impact price, but are used to try to attract new market participants in. And at some point, those narratives aren't going to continue to align with what's actually happening with the assets pricing. We're going to see sort of a fascinating period of time when that manifests itself.
Yeah, and I saw Miko smiling and kind of shaking his head over there. Miko, what are your thoughts as to what's going on with these technologies? Are things being accelerated? Where do you see everything kind of at right now around fintech and blockchain?
Yeah, I would say this, right, which is one of the things we're clearly seeing is we're seeing a decrease in the number of Bitcoins that are held, in the custodial centralized exchange. So we're kind of at an 18-month low. It's just above 2.3 million as of Monday, according to Glassnode. So, it's an 11% year-to-date reduction in the number of Bitcoins held by exchanges. And when I say exchanges, we're talking about custodial exchanges. Obviously, my holding pattern with Evercoin is a non-custodial exchange, so I think we're more like a wallet in that regard. So, but I think that's material, right? So if you think about 2.3 million Bitcoin, on the exchange, it really means that there is I think I'm always excited to debate Jesse because he's super astute and OG, but I think that it's interesting to reflect on that. I mean, if you look at the sort of street level narrative, another thing that's pretty clear in the numbers is that GBTC, the Grayscale Bitcoin Trust, is actually buying about 1.5x the number of Bitcoins that are now being mined after post halving. So, we're talking about, I know stock to flow is obviously suspect, but, there's still supply and there's still demand. So, I think that what we're really seeing is price action in these kind of wavelets, and it's that kind of thing is more whale driven. But I would say that there's also kind of a hodl driven thesis that's reflective of, things like wallet action. Another, I think, really interesting player in the space, full disclosure, I'm an advisor, a longtime advisor with Celsius, but like that's another form of hodl action, despite it being kind of like more, and I would say even thankfully on the more centralized side of the interest-bearing crypto marketplace, it's the volume is there and it's growing. So I think that the pattern of people hodling with interest is interesting, depending on how you define hodl. But like, to me, what I'm really seeing is I'm seeing that there are people who accumulate and don't sell. And, I realize that kind of maybe is a little bit contrarian, but the question becomes, are we developing an alternative, mechanism or not? So, jury's out. History hasn't been written, but that's one way to look at it.
Yeah, and Alex, I see you're all ready and teed up for this, so I'll let you go.
Well, so look, I'm doing what I'm doing because I have a lot of Bitcoin and I want it to go up in price, right? And I say that every day. I would love to, I think what we're doing is very helpful for a lot of people because there's no way to generate yield, but I do have a selfish reason why I'm doing what I'm doing every day. So the problems we have are things that most people don't see or don't know about. And I'll just give 2 examples to illustrate what's happening. So let's say you go on BitMEX and you get 100-to-1 leverage. Well, you just created 99 Bitcoins that don't exist. So this whole notion that we have only 21 million Bitcoin mathematically is not what actually happens. The price action, it has nothing to do with 21 million Bitcoin because the leverage that all these platforms, Binance and everybody else offers is manifested in the demand and supply. When you have $1 billion worth of liquidations on March 12, 90% of that is with Bitcoins that don't really exist. So that's an exaggeration of the price action. So, and the opposite of that is true as well. When you're seeing people buying GBTC, I can tell you that over 80% of what is showing as buying on GBTC is actually coins being borrowed from people like us that hedge funds deposit. You can go take Bitcoin and deposit it with GBTC and exchange your Bitcoin for a GBTC share. And because there's a difference in price, all you're doing is you're arbitraging the gap between the spot price on GBTC and the spot price. So that is not true net demand. Unfortunately, I would love for it to be true net demand, but all of that is arbitrage. And what happens is that the existing Bitcoins are being recycled. So, and I agree with one of the panelists just said that we all thought that the institutions are going to show up and solve this problem for us, and that's just not what's going to happen, right? I mean, I'm so not surprised that Goldman Sachs had nothing nice to say about Bitcoin because their franchise is all about keeping the money printing machine that the Fed and Treasury are running going. That's how they make all their money. So what's happening outside, this hurricane and pandemic and the financial hurricane that we're going through, plus the pandemic, plus money printing, plus everything that's going on, is a perfect storm for Bitcoin. If we cannot get this price to $30,000, $50,000, $100,000, considering what's happening, then we have to really, really reevaluate being a Bitcoin maximalist because it will never get better. This is the test right now. So all I'm saying is that a lot of the stuff that is out there is mirage, and the only thing that I believe in that actually counts is individuals joining in because they want to get off the dollar train and they want to be in a non-correlated asset. For me, that's the only thing that matters. That's why we're focusing 100% of our efforts on converting and bringing more and more people to physically buy the coin, store it, hodl it, and earn yield on it for the long term.
So I want to come back to that in just a minute, because I think that you've made a very good point that right now is a perfect time for whether it's Bitcoin or just digital currencies in general, that either this makes or breaks them in some cases, right, for the next foreseeable future. So I want to come back to that in just a moment. But Chris, I want to get your thoughts and opinion on what's happening in fintech and blockchain. I mean, is anything shifting and changing outside of what we just talked about from the currency side? What are you seeing on kind of the deeper technical side, and maybe even usage around fintech as you're building and investing at the same time?
Well, let's see. Everybody's thoughts are really good. I'm certainly not sure about the price of Bitcoin long term. I think it will probably go up because of Paul Jones's piece that was so well thought out and to the reasons why. So I that's where I tend to fall with regards to the price of it. But digitization of assets is so much broader than just Bitcoin and the few altcoins around it. As all assets are going to become digitized, and as people in general, in the general population, all kinds of different enterprises and endeavors are going to become more and more confident in the blockchain technology, and the improvements will come, and the wallet improvements will come. And so the movement is, we think, much more about a liberation of interactions between human beings, eliminating trusted third parties. And Alex, I send people to Celsius all the time. You've got a great business and approach. And so for those that want to earn interest on those assets, they can put them someplace with confidence and have those assets rehypothecated or whatever. There'll be all kinds of abilities to do that in a secure and safe way. But people will also be able to interact and be their own bank in essence. And I think the thing that poses the biggest disruption is 40 countries looking at central bank digital currencies. And that has the potential of being extremely disruptive to traditional businesses. And somebody earlier made the comment about Goldman writing this piece that was very protective of their model. And in the little bit that I read about it, it certainly seems to be the case. The U.S. dollar, of course, is the one that stands to lose the most. And I don't blame all the people involved in that in trying to be protective. But the problem is the technology marches forward, and it will enable people to have more independence and control of their assets as they gain confidence in the wallet technology and the keys and the security. We had a little fund where we were holding on a passive basis Bitcoin that we had registered as a commodity pool, and I thought that registration would help our marketing, but we don't have a big marketing team for funds. And so, and I didn't like the idea of just charging people to hold their money in a passive way. I'd rather them hold it themselves. But the point of this is that I was talking to a guy that said, Chris, I'll put some money into your fund, and I don't mind losing some money on the price of Bitcoin. I just don't want you to lose the money. And I think
don't lose it all, just a little bit. Don't lose it all.
Of it, right, exactly. So I think that has been part of the public's reluctance to be involved, is that they're afraid of losing the money. And so again, from our perspective, the opportunity, so the opportunities in this fintech, and I'm counting the evolution of blockchain, which is, to me, exemplified the most by governments looking at their own digital currency, which gives them all kinds of information and control, by the way. But the point is that that is now the Chinese and their well sort of promoted efforts to try to come up with a digital currency has, I think, been sort of the Sputnik moment that people have talked about. It's caused everybody else, particularly the United States, to suddenly be thinking about the same thing. And so that the wallet technologies, the security technologies, the ability to digitize assets is going to present tremendous opportunities in fintech. Our company wants to be a company that makes a market in the price of those assets, because we're of the belief in whether a decentralized or DeFi, a DEX exchange, or wherever it is that we meet, that oftentimes what a participant's going to need to do is to exchange one asset for another one. And so we think the market maker business can broadly go this way, not just the price of Bitcoin and a few alts that are in the current, which are in the current public sort of eye, which is where it is today. But I think it's very early is our view.
Yeah, and speaking of early, I mean, Jeremy, I know you do a lot in this space, and you guys have the family office and are doing investments. But from the actual core technology, I know you're kind of a geek like myself around the blockchain space. So what are you seeing in addition to what everyone has mentioned? I mean, where are we with this technology? I mean, I could rattle off 40 different headlines of things that have just happened in the past week of companies and things moving forward. But what are you happening to see in this space right now?
I think right now, just global macro landscape, you know, investors are realizing that, you know, this is one asset class that, you know, has a high growth potential. Japan, Germany, you know, the EU zone, GDP numbers aren't looking great for this year. And it's just causing a lot of institutional folks to, you know, take a second look. But I think, you know, within blockchain and crypto, there's certainly been an emphasis on finding, you know, smaller yield, but safer routes. So not necessarily just speculating on coins, but, you know, getting into lending, and, you know, Celsius, for example, with great volumes, is a showcase of that. Technology-wise, you know, I really think the use case for crypto and digitalized assets is in emerging markets, but most of the tech is being developed in established financial markets. So there's a bit of a gap in product market fit. But, you know, there's certainly a revamp and revival in, you know, digitalization of real estate, and illiquid instruments, and geopolitical tensions, and other forces are going to, you know, continue to force, you know, investors to look at that, you know, a liquid instrument that I can pull my money out extremely fast, you know, if they're, you know, Trump tweets something, and you know, that's going to continue to evolve, but institutional money, it's going to take a while. It's a walk before you run. I don't know.
Yeah, no, I think that's a good point. And you know, Dave Edwards, I want to come to you and Jean next. So we've talked a lot about the digital asset space and a little bit about fintech, and now I want to take that and kind of slide into where these other technologies come into play, right? So artificial intelligence, and other areas that you're both focused in. You know, you combine that with the fintech we knew, the fintech we now know, what's happening with the emergence of contactless payments, the just digital assets and currencies that we've been talking about, and then you throw blockchain technology in there. I mean, what in your mind is happening right now? You've got one of the largest data sets of people being locked in their homes and taking care of transactions unlike they've ever done before. What does it all mean? What does all come from that? If we look at it from maybe the AI perspective and how that technology plays a role. So Dave, I want to start with you because Jean's enjoying as much time as he possibly can with his newborn. So we'll give him a few more minutes.
Sure. Thanks. I think that the fintech and AI is sort of just getting started, if you will. I mean, there's been a long history of using AI and algorithmic trading and a variety of other things inside the banks. So there's a long history there. I don't want to discount that. But in terms of new applications, we're still seeing quite a lot of work that's just using exhaust data, right? So we're seeing, you know, we're getting approached by large scale financial firms and large consulting firms that work with the financial groups that say, we've got this enormous amount of data. What do we do with it? How do we find ways to get better understanding of whatever the asset class is? Doesn't really matter whether it's a traditional or non-traditional. How do we understand how to research it by looking at global environments? How do we get a better understanding of price or valuation or churn prediction, right? So that whole sort of world around making trading more profitable. Quite a lot of work in risk and underwriting, which could be around credit risk of the counterparty, or could be analyzing contracts, which especially for highly tradable assets is a really big deal. If you ever step into the world of private equity or real estate or any of that kind of world, the documents get real thick real fast. And so the application of AI to contracts can actually be quite helpful. And there's quite a lot of work on working with customers, the consumer things that we see today. As a coach, how to save your money, how to invest your money, how to be a better customer service agent. So this is sort of that application of NLP technology and chatbots, but put on a little bit more steroids of looking at your, at what a consumer might want to be able to understand and how to better serve them financially. All of this is premised on the fact that, one of the challenges with any new asset class is there is no historical data. AI only operates on data. It's pretty crap at predicting things that are new. AI is not good at novel. It's only really good at understanding past predictions and applying it to somewhere that's a half step away. It's extraordinarily powerful when it does that. And one of the reasons why the traders can be so successful is the AI can see things and understand patterns that we as humans can't understand. And so anytime we look for things where there's a lot of different dimensions to the data, it doesn't mean that it has to be a very complex set, but just a lot of different dimensions. We as humans think in 1, 2, 3, lots and lots and lots. Computers think in hundreds or thousands or millions of dimensions, right? So it can literally see yoga AI, as we call it, patterns through the data. So in fintech space right now, we're working on a project that's analyzing private company data and making predictions off of it. We're looking at a specific asset class in the entertainment industry, which is kind of interesting. And a couple of things like that, where you're looking at lots of different data sources that you wouldn't not normally have looked at tying together.
Mm-hmm. No, it's interesting. And Jean, you play in this along with many other spaces. What are you seeing at the intersection of AI and blockchain? And Jesse, I see you shaking your head. Don't you worry. I'm coming back to you on thoughts with this as well. So Jean, what are your thoughts?
Well, I think most of those points were right on. There are a couple of, the weird thing or the interesting thing in AI related to crypto or crypto alone. It's a little bit like in aerospace, right? It's people are really focused in innovation and they want to innovate every day. But at the same time, you have that schizophrenic ambition where no one will go in if the regulation and the big brother don't take part of it big time and regulate the industry like it was a stock or a bonds or whatever, Fidelity or Vanguard mutual fund. So you have those two worlds shifting together, and I get the feeling AI might solve that in a very modest way. As Dave said, we need data points to do data analytics. That's core, but at the same time, we're getting more and more data. We're getting more and more people using their credit card into a Bitcoin holder instead of talking to American Express for various reasons, including the pandemic. I think the pandemic are shifting a lot of people into Bitcoin, like the same way they're shifting a lot of investors into gold or into refuge type of safe strategy or countercyclical strategy. So yeah, we're going to find an interesting data set out of this pandemic. But at the same time, I think we're going to see two trends. We're going to see the trend of the US, where we're going to have the Uber-like strategy, where the corporate or the technology or whatever you call it will dictate the legislation. And then we're going to see the other trend, which is the Chinese or the Europe, where the legislation will dictate probably the companies or the corporates. It's going to be the horizontal versus vertical integration in that sense. I don't know who's going to win because when you touch at someone's pocket, they tend to be quite annoyed at the first step. So it's hard to say who's gonna say amen to that first. So yeah, I don't know. If someone knows, please let me know.
Gives Jean the magic answer. Joshia, I want to come to you real quick. I mean, you're in Asia. You're focused on Asia. You're investing in the early stages up to Series B in this space and focused on fintech. I mean, Asia has been, in my argument, and others that have been on the show have said, led the wave in many respects to this next stage that we're going to in fintech. With contactless payments, with things like Tencent's WeChat, and others. What else are you seeing in the fintech space? Have things changed globally? Are you seeing the rest of the world kind of catch up, or is Asia or somewhere else kind of leading that market as to where fintech is going?
So for fintech within Asia, I think that's a couple of new trends have been emerging. I think one of the big ones that we are actually focusing our eyes on is on this whole theme of embedded finance. So finance being anything on insurance, your payments, your credit, being embedded in the end services that be it your Facebook, your WeChat, any services, digital or not, that owns the customer, essentially has the full attention of the customer on a daily basis. Going forward, we see a lot of these innovations using existing technology, be it AI or blockchain, for either micro-targeting or real-time underwriting, to embed all of this, what we traditionally call financial services, into your existing kind of application layers in, at least in Asia. That's what we've been seeing. And on top of that, I think COVID has accelerated a couple of new needs or innovations within this area as well. A lot of the last couple of months, we've been looking at things around wage access, things that I guess have been accelerated due to COVID, and the need for wages and salary loans have started to accelerate as well in this part of the world. One other thing that might be slightly more interesting as well when we look at credit is, as customer or as businesses go under, unfortunately, during this period, and as people lose their job, I think one big sector that would benefit from this whole fintech wave would be the area of credit management, as defaults start to kick in, as businesses and people start going bankrupt. I think that's something that we are currently focusing on as well. I think the final part for that would be on insurance, which is I think increasingly going to get a lot more attention. Over the last decade, we've been in a kind of decade of boom, right? So businesses and individuals had a very kind of downplayed perception of risk, but after I guess 2020, businesses would be a lot more focused on risk management, be it supply chain risk, pandemic risk, cybersecurity risk, or any specific type of idiosyncratic risk. So companies or new fintech companies that can leverage either past data or adjacent data to kind of product innovate around that kind of era, we will tend to see those companies doing well coming out of this crisis.
Yeah, and I agree, and I think that tees up David. The last to comment on this. Would love to get your thoughts, as everything has shifted and changed. Insurance tech, as Joshia has just mentioned. Plus, you're also in the enterprise blockchain and security space with Guardtime. So, love to get your perspective, not just on the insurance, but what's happening in the broader market of blockchain. Is this real in the enterprise, or are we still talking?
Well, I think I come very much from the data integrity and data provenance point of view. So, being a Estonia background, right? The cyber attack in 2007 created Guardtime. So the whole idea is providing data-driven environments. So I think from this COVID, I think we've seen government, supply chains, healthcare, and insurance all failing in a lot of areas. And I think there's a need to look at more outcome-based scenarios from those sectors. So on the risk management side, so I think that these sectors are going to reset. And I think almost certainly that's going to be accelerated now because of this. So there's a loss of revenue in a lot of areas, and innovation is going to replace those revenue at lower cost. So we're going to see some very big changes in I mentioned the insurance, because the claims issue is massive, right? The business interruption, the claims are not being paid. When insurance claims are not paid, the infrastructure breaks down. So we're going to see a move to capital markets using blockchain data as a trusted trigger on predefined pandemics or other kind of perils, and we won't be doing traditional insurance the way we do today. I'm in Asia, like the previous speaker. I see a lot of digital insurers now being accelerated. It had already started, but in Hong Kong, 8 new digital insurance licenses alone in Hong Kong, without looking at the rest of Asia. And a lot of digital ecosystems that we're investing in here now. So a vast leapfrogging in Asia, a push forward of insurtech. And one big thing to mention here at the end, the blockchain is really driving, is a new market of tradable IP patents. I think we're going to, because of this innovation, we're going to see a big market of IP. And there's going to be IP insurance, collateral loans taken out on IP. So people can, trade those, transfer ownership, get loans out on the IP. And that's going to be a very big market from this. And that's a brand new market, brand new line of business. And finally, I think digital employee benefits are going to move from one insurer, one broker, is going to move to a digital wallet and aggregate employee benefits right across all the sectors. So I think big change.
Wow, that's a very big change. First I've heard of that as well, so it's exciting to unpack that. Alex, I'm coming back to you. I told you I would. I've made you wait. Jesse's just chomping at the bit to answer this question as well. But is this the digital currency moment? Right? Is this the time in the era where it's make or break for digital currencies, including central bank? We can wrap it all in one. So, what are your thoughts?
So before Corona, I did a presentation here on Wall Street. There were 250 compliance officers there from all the biggest Wall Street firms, and my first question was, okay, how many of you individually or as an entities own Bitcoin? And not a single hand went up. I don't know if because there was a camera in the room, maybe they were shy, but the point is that most major institutions, either because of their bylaws or because of their profiles, are not yet, they can't cross that chasm, right? And even Paul Tudor Jones, we're celebrating him, but he bought futures. He did not buy the Bitcoin. So that is a huge difference. So, I go back to, yes, it is the moment, but, again, on our YouTube channel, you can see me going on the streets of Manhattan and interviewing people and try to convince them to buy Bitcoin. And I have almost zero success, right? So the question for all of us is, how do we cross that chasm? How do we convince people that, okay, listen, these dollars that you have just got diluted by 20% because the consumer price index only measures milk and internet access and things like that. It doesn't measure how much money the Fed printed. So my point is that we have to, I'm presenting all the problems. The answer is we have to create more utility and less volatility. And today, the volatility is great for traders and people who make money out of it, but it's not so good. There's no reason for 1 billion people to join. So what is that additional utility that we can create beyond Bitcoin as store of value or Tether as a form of payment? Really, these are the only two products that we created that you can point to and say, hey, these things are used almost every day by millions of people. So that's the challenge of adoption we have. And if we're just getting speculators who want to make a lot of money by not working, we either already ran out of them or we're about to run out of them. And so that's really the issues that as a community we're not really doing a great job at addressing.
Thank you, Alex. And Jesse, I've held you back. I'm letting you go. Go for it.
I take offense to speculators not working.
My point, there's not enough of us. That's the point. I'm not saying that, we're all making money at this, great, but is there enough of us to get Bitcoin to 100,000?
Yeah, I absolutely agree. I mean, I think we've got a couple key issues here, and I want to touch on a couple points. The first around AI, and particularly AI as a function of sort of price prediction or part of that speculatory component. I mean, I think what Dave mentioned is exactly true. Like you can go on Medium every day and read some article about somebody that talks about using some LTSM AI model to predict price in Bitcoin. And you read 15 pages of text, and then the last paragraph is it didn't work. Like there's not enough data in this space, and the price is not predictable using LTSM models. And so AI, when you think about AI and blockchain, like I think you need to separate that from sort of price prediction and think about it as broader applicability of data. Like particularly Facebook's Libra initiative, like we all know, everybody knows the entire reason they're looking to build that is so they can mine the data on chain. Like that is a applicable use of AI. Not around price prediction. Around sort of adoption, I mean, I think the Paul Tudor Jones point around cash settled futures is a really important one, right? You've got market participants who are looking at this space. They're looking at the volatility that exists here and the price action that exists here as an interesting phenomena, but they're not buying spot coin. And that could be a regulatory issue. That could be any number of things, but to get excited about that, yeah, it's a great art. It's a great sort of memo. It certainly builds the case for the asset class. It certainly is a stamp of validity for what we're doing, but he's not actually buying spot coin. It's cash settled futures, so it's a little bit of a caveat. And then lastly, I think this has been an issue for the last 2.5 years, at least since I've been actively participating in the space. But you talk about how do we actually get new market participants here? Like the user experience of all of these tools is awful. It's been awful. It continues to be awful. The fact that people lose money every day sending capital around or getting SIM swapped, like it's pathetic in my eyes that the industry as a whole has not done a better job working to remedy those broader issues. And it doesn't matter. Like we send capital every day, and it's still terrifying every time we send funds. And like it shouldn't be like that. It's a unfortunate consequence of sort of some of the technological underpinnings that make this technology work. Like that's how they operate. But until sort of the everyday person who doesn't understand programming, is not sort of incredibly computer literate, won't fear losing all of their money because they type out an address or they got SIM swapped. It's like that is, in my eyes, one of the biggest barriers to adoption of this entire industry. So yes, we need the use cases, but we also need to fix the user experience issue here.
Yeah, Miko, I see you giving the thumbs up, the left and the right. Any additional thoughts? I mean, is this the moment, or to what Jesse said?
I 100% want to just bump up what Jesse said about this user experience issue. It's something we're very passionate about at Evercoin. I personally got hacked early in my crypto experience through SimSwap, and so I created a website called safercrypto.org. And I think the key thing for me is that what is a lesson learned by a user that gets hacked? And I'll tell you what the lesson is they learn this valuable lesson of don't ever touch Bitcoins. Don't tell anyone to touch Bitcoins. If someone talks about Bitcoins, tell them how bad Bitcoins are. So like those are the lessons, right? So like we need to not teach people these kinds of lessons because they're not lessons that produce improvement, right? Those lessons don't produce improvement to the system. The kind of lessons that produce improvement are kind of, okay, next time I'm going to do it better, and so it feels like, safety, it's really that the user experience is a big deal. And I think, we need more organizations kind of investing in developing better user interfaces. I'm actually really excited about things like Cash App and, so-called neobanking. And I actually think neobanking that abstracts away and commoditizes both the blockchain layer as well as the kind of traditional banking layer for retail is exciting. And so I think hats off to like Square. I think Robinhood and Coinbase kind of crash a lot, so they're not as good. But like Revolut's doing okay, and they could sell Bitcoin too. So I feel like those are the players that are going to drive more adoption. Is neobanks, and because I think that they're great at user acquisition and they're great at user experience and app development, and traditional banks just aren't. Like they're just really bad at doing those things. So hats off to the neobanks, and let's have more of that.
Jeremy, you're shaking your head. Anything to add?
Yeah, Revolut is great. They're coming into the U.S. applying, license in so that could be really huge for the space. Multi, currency accounts is going to be huge. So I really think that could be a huge adoption driver.
Awesome. Well, guys, I want to pause right here. We are almost at the second half of our show. I want to pause here and let our startups get prepared to do their part of the show. Everything has been great thus far. Thank you all for the insights. And we're actually going to get on the second half of the show. I want to dive a little bit more on the capital side. So if you're building in this space, if you're investing in this space, what should you be doing? What should you be watching for? How you should be preparing yourself? Because I think that's an added benefit that our audience would love to see and hear from each and every one of you. But now I want to switch to that next stage with featuring our founders. And the way that this part of the show will work is each of our founders will have about 5 minutes to present their projects. We'll hold all questions until the end. And afterwards, I'll call on a few of each of you, our speakers, to provide feedback to each of our companies. If you have any quick thoughts, you want to speak on a specific company, please drop me a note into the chat, and I'll try to make sure I call on you for the respected startup. But we'll be cautious of our time, and everyone can follow up with each other after the show as well. If Elena hasn't, or if you haven't received it already from Elena, but you should be receiving a form. That form for our judges, you'll actually rate each and every company. At the end, we'll total that up, and we'll announce our grand prize winner. So after each startup, make sure you get those results in as soon as possible so that we can get that award and do a nice little golf clap for everybody at the end of the show. And so without further ado, I do want to kick off our very, very first startup. Martin, you have been smiling and loving every moment of this panel. Are you ready, though, to switch gears and share us?
I'm ready to go. Okay, I will share the screen. Just a moment.
We're ready to get just as big of a smile on our face for you. So get ready. The floor is yours. You've got 5 minutes.
So just a sec. I will put a timer in. So hello, I'm Martin. I am co-founder of Smart Credit IO. Okay, we are doing peer-to-peer crypto lending. Now, let me first introduce our team. So it's me. So I spent 10 years at Credit Suisse in Zurich. But before I did quite some startups, and some products got successful. And I'm MBA and CFA, so I'm actually the banking guy. And my twin brother, he's the same. He's the banking guy as well, spent as well 10 years in a Credit Suisse. And the hobby, these are the credit systems, these are the monetary systems. And we have a bunch of advisors, these are as well the Credit Suisse. Now, let's speak of the crypto. So we know of crypto, we know the traditional finance, we know how to finance everyone. Traditional sector doesn't have any innovation. So the response of this is that we have alternate crypto financial system. It's very simple. The currencies, the wallets, the exchanges, there's lending, there's Celsius as well listed. But now we are in the crypto lending business. Now, what are the keys here? There are quite some issues. This is what we are addressing. Too high collateral ratios. Okay. No transferability of loans. Okay. No control of your assets. Okay. Trust third parties. No API. How to integrate? How do you create the open banking? No credit scores. There are quite some issues. Now, let's look one by one. So, collateral requirements. Today, if you're taking crypto loans, okay, if you look in DeFi, if you look in other solutions, you are speaking collaterals like 400%, maybe even more so in some cases. So it's quite a lot. So is it good? Is it not good? Let's think about this. The second issue that we are seeing is, if you're looking at traditional financial markets, we have always something is called transferability of the loans, that we can transfer the debt from one person to another. Actually, we don't have it so much in the crypto sector. So the next, of course, we have this custodial or non-custodial solution. Okay, the honeypot problem. If there are too many assets in one little pot together, there are, let's say, parties who are interested too much about them. They're hackers. So now about API. If you look in traditional banking, everything is integration. We need as well this integration. But how do we integrate the lending into the other applications? So, and the credit score, there's no credit score. So all these kind of key issues that we are seeing, and we are saying solution is us. It's a smartcredit.io. That is the solution. So what we are doing, okay, low collateral for the borrower. Like say we are CFAs, chartered financial analysts. So for us it's easy. Okay, let's say for us it's easy to reduce the collateral requirements for the borrowers. That means borrowers can borrow much more on our platform. So now for the lenders, we create the transferability of a debt. So he can transfer the debt tokens to other persons. That becomes transferable. The next thing that we're adding integration. So the API can be integrated to wallets, to marketplaces, to payment providers. We have a credit score. And of course, it's non-custodial. Everyone keeps his assets. Everyone keeps and controls his assets, not the third party. So, okay, competition comparison, small overview. Okay, these are the key features here on the left side. Then smart credit, DeFi, custodial, what are the differences? Okay, of course, everyone decides what's important for us, but what we are saying is important, what's important for the borrowers. These are the key players on the market. So, and on them, we focus on them. Now, the next market size and growth. So Alex said some numbers before. So we say last year it was $15 billion, but that's important. It's growing very fast. The lending business, 25, 30% per quarter. So our business model, 0.5 fee on every transaction. That's what we're doing. On market entry, we would very much focus on the crypto credit as a service API. So practically, the wallets can integrate us, the crypto exchanges, the payment providers, the online merchants, and just to offer the credit to the customers. They bring the users, we are CFAs, we manage the credit risk. So our roadmap, we had a pilot last year. We got the licenses, okay, regulated in Estonia, and we are just now launching our product. Okay, now in 2 days, 3 days, 5 days, it will be launched, our product. And we have, of course, our roadmap, the next features which are coming. Now, our ask, the financing ask, okay, we have our previous financing, and there's a next financing route. This is 500K that we're looking, convertibles or the equity, and we keep this round open till October 2020. Okay, so thank you for listening. Okay, if any questions, please let me know.
Wonderful. Thank you so much, Martin. Appreciate it. Judges, please make sure you get your thoughts and scores in. Submit those over to Elena as we welcome up our next speaker. Minjor from the Money Club, are you there?
Yeah, I'm there.
All right, the floor is yours. You've got 5 minutes. Hi, welcome.
Okay,
the floor is
let me
yours.
just share my screen. Yeah, I hope you guys can see my screen. Yeah, okay. So, hi everyone. Thanks for taking this time out. I am the founder of Money Club. We are an artificially intelligent chit fund cashier. Chit fund is basically a ROSCA. ROSCA is a rotating savings and credit association. So just a high level pitch story of our company. We are formed by experienced ITNs, the top education institutes in the country. We have built an artificially intelligent chit fund cashier that has disrupted the traditional $50 billion industry. We've grown around 400% in the last 12 months. We have pooled over $2 million in over 2 lakh transactions, 200,000 transactions in 20,000 bids. We have formed over 2,500 money clubs till date, and our default rate is less than 0.8%. So this is just to give you a sense of our metrics. We've been seed funded by Credit Forum, Let's Venture, and Loyal VC. Post-COVID, our user growth has actually increased by 2x, so which means that we have gone into a hyper-growth mode post-COVID because our product is purely digital in nature. And we are raising around $500,000 to invest in automation to scale up because we are scaling up quite fast. So what is a ROSCA? ROSCA is a rotating savings and credit association where, let's say, 4 people get together, they contribute $10 to a pot, create a pot of $40, and then one by one, they pick up the pot of money. How they pick up the pot of money is by bidding for the pot, and the bid amount that they make is actually split among the remaining 3 members. Now, the cashier is someone who forms the group and handles the money in this whole picture. In India, it's been used by 150 million users, and there is a cashier who forms the group, collects the money and distributes the money, and all this happens manually in hard cash. What we have seen is that the cashiers typically run away with people's money, and a lot of people end up losing their money. And chit funds have got a bad name in India right now because of that. Now, this market is $50 billion in India itself. It's a huge market, and it's a $1 trillion market globally, where people call it by different names. People pool up money, they form small groups of money pools, and they pick up money from the pool. Around 150 to 180 million people do this in India, and 72% actually use this product to save money. It's not a lending or a borrowing product. And 95% of these people actually have bank accounts, which means that they are part of the traditional banking system, but still they prefer to use a product which is off the banking system. What we have done is, because the cashier is the fraudulent piece in the whole picture, he runs away with people's money, we are replacing that guy with an artificially intelligent cashier. It's called the Money Club. It's a mobile app. It's 100% digital on the mobile. The users log into the app, they get verified by our algos, and then they are set on a money clubbing journey where they start pooling small amounts of money first and then slowly start graduating to bigger money pools. And their journey is basically underwritten by algos, and only users who have a good transaction record actually go up to higher amount money club. In this process, we have managed to create the first social network in the world where users actually share money with each other instead of sharing just ideas and thoughts and pictures. Now, compared to competition, we are so typically competition works manually. It's slow. They pool money very slowly. They pool money once a month. Whereas we stand out, and we, because of our truly digital nature and a tech platform that we have, we are pooling money at very high frequencies, which means that we create money pools every day for some clubs. We micro pool money, which means that pools can be as small as $20 when people come in, and they can graduate up to $2,000 based on their transaction history on the platform. And on this process, what we are doing is we are underwriting user behavior. So as they keep transacting on the platform, we are monitoring patterns through which we can gauge whether a user is going to default or not in the future. If they're going to default, we kick them out of the platform. So it's like a money game, right? People start with very small amounts, like $15 pooled amount per day. They play that. We do a discipline check. We find them trustworthy. We take them to the next level, which is the L1 verified zone, which is the blue bar you see on the slide, where they pool $70 every 3 days, where 10 people come in and they bid for the pot every 3 days. And then slowly they start going to $100, $300, $200, $150, and multiple clubs at the same time. So as they keep building a transaction history, we can keep collecting data, and we also supplement that with additional data like credit and income data. In cases where we find the users to be, on the risky zone, we ask for more data. So our founding team is basically two of us. Both of us are from IT. I also did my MBA from INSEAD in France. Came back last 10 years. It was in the startup world, dabbling with iBanking, and before I started Money Club. Strategist is another co-founder, again from IIT Kharagpur, top premier institute of the country. He's a great guy at technology. He's been a great technical architect for startups and a $2 billion insurance company in India. Our advisors are also from top tier institutes. They are part of funds. They are general partners of funds. And we have a lawyer, which is who is the top lawyer in one of the top 5 legal firms of the country. So we've got a great set of advisors backing us right now. Our revenue model is basically very simple. So every time there's a bid for the pot on the platform, we earn a commission from the bid. We earn around 3.5 to 4%. In the last 12 months, we have actually grown 200% in terms of number of bids we are conducting every month. So we're growing quite fast. We have crossed around 70,000 downloads on the Play Store, rated quite well. We've closed around 2,500 money clubs till date. Total amount that we pooled up till date, sorry, this is in rupees, it's actually $2 million till date. Over 200,000 transactions, and 20,000 bids that we've conducted. So we have a very sticky product actually. So the repeat rate is almost 70%, and the investors who are investing in this pot actually make an IRR of around 40%. It's phenomenal. It's like out of the world actually, if you look at it in a global landscape. And the borrowers are actually borrowing money at half the rate than what banks are offering in India right now. So if you look at the traction and trend that we are seeing, we have already started our growth on the exponential curve. It's very early days for us. We've got the MVP out in the market. We've tested it out. Customers love us. We know the whole customer cycle. We've gone through multiple iterations of the cycle, and we are fairly confident that we've hit the right product market fit. Now all we need to do is scale up. So this is just a slide where we are posting some reviews that users have posted on our behalf. It's on the Play Store. I won't read them out. You can see it by logging in on the Google Play Store. Our plan is, because we are scaling up fast, we found the right product. We are sitting in a huge market, it's a $50 billion market. We plan to hit a $2 billion AUM in 5 years' time. We expect to scale around 500% on an average every year for the next 5 years. And the social network of money that we are building, where people across the country are currently can pool up and discover other users, pool money up with them and pick up money. All the money movement is digital, online. There's no cash involved. Now, future of this product is once we capture the Indian market, we plan to go global, and we plan to walk into crypto money clubs where users from across the world can actually pool up money in the form of crypto, and they can pick up money whenever they want it. We have angel investors that have, last slide, Kylie.
Yep.
So yeah, we have angel investors who are backing us, people from Facebook, Microsoft, Ellicott in India, and some GPs from some funds already. We have 3 institutional investors on our cap table already. And we are looking at raising $500,000 right now.
All right, thank you. Sorry, you went a little long. I had to cut you off there, but we're excited to dive in, and all the investors can follow up with more Q&A afterwards. So next up, I want to welcome our last startup founder, Philippe. Are you there? I see you.
Yes, I'm here.
All right, the floor is yours. You've got 5 minutes. All right.
All right, let me bring up my deck here.
All right.
Excited to be here. Tough acts to follow, and I have definitely loved the dialogue beforehand. So I'm Philippe Pinto. I'm a CEO of Bit49, and our long-term vision is to make a mining-based bond-like product that institutional investors would love. But for now, we are laser focused on the actual customers and traction that we have, and we are convicted that mining crypto is better than buying crypto if it's done correctly from an investment use case. I don't have to tell you that cryptocurrency mining is growing fast. A lot of this on the demand side you're familiar with. On the supply side, there are innovations in hardware infrastructure and the ability to buy power at scale that is flatlining the cost curve. To Alex and Chris's point on Goldman's critique about no investment case in crypto, this solves for a lot of that, the cash flow properties, as well as the volatility. If you look over time, so first of all, there are a couple of factors that are non-orthogonal. They're orthogonal to crypto. They have to do with hardware and things like that make mining less correlated with the general markets than crypto is itself. And we've seen a lot of sort of better risk to reward that our users have actually experienced, depending on how they play the crypto mining hardware market. But today's users have they're faced with a really hard task. They either go with these all-in-one hosting providers that have expensive secretive pricing, or they try to cobble together a lot of third-party solutions themselves. And there's a lot of risk that materializes and eats away at returns. So we're trying to be both transparent, efficient and reliable, and deliver these returns that make mining a better use case than buying and holding Bitcoin without all the hassle that comes with it. So a lot of this is not rocket science. We obviously need to have optimized hardware and software platform. We're working on that. What I would say to Jesse and Miko's point about user experience is that we do have a lot of customers who love us for a traditional sort of crypto use case. And we've got a lot of traction. We've had over a couple hundred K in MRR. We actually sold almost 500K in MRR after 6 months of an MVP-based product launch, and we have a lot of pent-up demand. To give you a sense of the market size here, for retail and what we'll call enterprise hosting, so people who want to buy machines and put them in some sort of data center, it's a $650 million market within the US, global demand for US products. If you add that up for all the other adjacent markets and the bigger markets we would grow into, it's a $10 billion pie. So the current model involves, buying hardware and then paying a monthly hosting fee. We want to innovate on that quite a bit long term with some other bond-like derivatives. Our LTV to CAC is very low. We don't know how representative this is or how much it would scale, but we have barely scratched the surface, and we have a lot of backlog. So we're confident we could grow and hit our immediate targets. Previously, we've done this all at sister facilities, ones that we don't own. And so our cost structure has been pretty high. We're now raising capital to do this in our own in-house facility. We have a clear roadmap in terms of offering a product that's very similar to what exists today, but then slowly getting into adjacencies and offering things that are much more like what Goldman Sachs would expect. We do think that now is the time to do this. We've surveyed the competition. We know them extremely well. We know exactly what they're doing. A lot of them, because they moved a year ago, are locked into cost structures that are not going to be good a few years from now. Others are making big bets on risky things that we think won't pan out potentially. And we think that we have a differentiated approach, both on the cost side, which is where everyone is innovating, but also on the revenue side, that will help us be long-term dominant. I've spoken a little bit about our competition and just trying to make the 5-minute cutoff here. What I'll jump to is our team. So I got my MBA from Stanford. I'm almost done with my JD from Harvard. Our CTO, co-founding CTO, who got his PhD in computer science from Stanford, and he is a hardware architect. And so he is uniquely capable of developing and overseeing a lot of the innovation that needs to happen on the electrical engineering and hardware architecture side. So how much are we raising? Pretty immediately, we could use 400K to kickstart some long-term things. Maybe some of you pre-seed investor types would be interested in something like that. We've actually done everything we've done today, bootstrapped, a little bit of debt, but largely on our own. We're looking to raise $12 million, but in talks with some groups who everyone has heard of, they've sort of pitched us to raise something more like what our new entrants have done, $60 million. And so we're looking to raise that relatively quickly. We know exactly how we'd spend it. The big difference between 12 and 6 is that we would begin to buy our own energy assets that would allow us to effectively have free power. What I'll end with here, unless I have more time, is that—
You got to wrap it up.
All right, is that unlike a lot of software plays, this is a collateralized asset. A lot of what you would invest in is fungible in a sort of traditional market, energy assets, electrical assets. So I'll end it there.
Wonderful. Thank you very much. And thank you to all of you startups and founders that pitched today. It takes a lot to get up on stage, especially on a live stream like we have today, and share what you've built. So we're very thankful for that. And to each of our judges, please get those last scores in and over to Elena so she can total that up and we can announce who will be today's grand prize winner. But Philippe, if you could unshare your screen, please. I want to go ahead and make sure we get feedback to each and every one of you. So I want to start with actually here with Philippe. So David, or excuse me, Jean, any quick feedback for Philippe here? Oh, Jean? All right, I think we may have lost him. So
I'm here. Sorry.
There you go. No worries, no worries. Any quick feedback for Philippe and what he and his team are building at Bit49?
Yeah. Well, look, I'm a true believer of of this type of technology, especially I mean, I had that idea in my head, like doing a collateralized new type of bonds for mining. So I really like the model. I think that's, I mean, to circle back to the previous conversation, it's if we have trouble explaining Bitcoin, that's going to be a little bit even more harder to explain. But at the end of the day, collateralizing a hardware and a software and building upon that. Yeah, I would love to continue the conversation, Philippe, on privately and see what's your strategy in electricity management? Do you have like do you guys have and also legislation? Where do you guys base your farms, and where are you guys? What's the strategy on that?
Is that a question? Do I get to answer that, or?
Yes.
I don't know.
Yep. Yeah. This is the Q&A session. Yes.
Great. No, I mean, I'm happy.
John knows. It's all you, buddy.
Oh, great. Great questions. Look, we are willing to be exposed anywhere globally. That would complicate regulatory landscape for us, perhaps in the U.S. from a customer standpoint. But the truth is that a lot of really cheap assets are in the U.S. and for reasons that might take too long, a lot of demand is converging in the U.S. because of regulatory risks that are manifesting themselves elsewhere, but not here. We have a little bit of a diversified approach, flared natural gas, obviating that with modular data centers as a way to get oil companies to pay you money to take their gas, and it's environmentally friendly. There's traditional scarce hydro assets. There are other things, renewables. We would have a diversified approach that way. As far as regulation goes, look, we would be stepping into it very, very carefully. I know a lot of people in sort of important places in the U.S. at least that would be good mentors and help guide us on that. But securities law, just got done taking that. Something I'm very, very want to be very attuned to, and I wouldn't say that we have a super thought out strategy for that, but we would want to definitely do everything by the book.
Great. I mean, yeah, we should exchange on that privately. I'm not quite sure how we can do that, Kyle, but just
I'll help you guys out.
Hook us up.
Yeah, I'll hook you up. Thank you, Jean. Chris, any quick thoughts or feedback for Philippe?
Not really. My experience with the miners, and we have a number of them as counterparties because they come to us to sell their coins on an OTC basis. Mm-hmm. And that's I'm not telling you anything you don't know. That's a tough business. A lot of it has to do all with the price of the electricity, and it's a pretty competitive game in places like Kazakhstan and around the world. And so, but you did a great job of pitching it. That the detail of the cost of that electricity is a key piece in the global competitive world, but it probably varies some from coin to coin. So in 5 minutes, it's very difficult for you to get into that. I thought you did a very good job from a high level.
Awesome, thank you, Chris. And Jesse, I want to come to you for Martin. So Martin at Smart Credit, any thoughts and feedback to Martin?
Yeah, I love the concept and good job on the traction to date. The one note I had around, did you say IRR of 40%? Like that seemed very surprising to me, and particularly in peer-to-peer lending. It reminded me of some of the early peer-to-peer lending products in the US.
I didn't mention IRR. I mentioned collateral ratio.
I think Jesse, you're confusing with Money Club.
Oh yeah, sorry. Yes, I am getting him confused.
Oh.
My apologies. So on your offering, can you talk? I missed it in the presentation, or it wasn't clear to me. Can you talk a little bit about the state of the platform technology? Sort of what's developed, what's to be developed. So that was one question, and then the second, we're a big user of lending platforms. We both borrow and lend. A big part of that for us becomes counterparty trust. And so sort of new market participants become a bit hard to stomach. So can you talk through how you try to remedy that issue? Like how do you work through to get to scale with counterparties?
Oh, Martin, that's to you.
Well, was this from me? I took this from the other gentleman. Okay, I had to excuse me. Can you say this in a short summary, this question again?
Yeah, absolutely. Yeah. So what's the state of the technology? And then
technologies, we are just switching in now the mainnet. It is switched in. And like say, the key is focusing on the borrowers, because the lending market is driven by the borrowers, not by the lenders. So there's a more supply than demand. So, and our way to get to this market is, it's like we get this low collateral, like say to CFAs, chartered financial analysts. So for us, it's, let's say it easy to do it. And the second is it's the integration with the APIs. Let's face it now, most of the crypto solutions, they're like a silo 1, silo 2, silo 2000, silo 3000. Now what we need is the integration between them. If you are a banking platform, it's all integrated. Now we need the same as well on the crypto sector. So there will be coming this phase that all platforms start to integrate more to other applications. And now that is our philosophy. So you have Wallet. Now Wallet will integrate all services. They will get half of revenues. They will bring the users, okay? And we manage the credit risk. And okay, we get the users. That's how we enter the market. Now the counterparty risk, okay, if I remember this was the question, okay, it's a collateral. It's mainly collateral, but we have as well additional features. Now, most of the crypto lending is only collateral. We think it's just a little bit too little. We need a little bit more. So a proper risk management has multiple levels. Now, one being collateral, but the next is we have as well loss provision fund. We have as well a credit scoring. So we have multiple elements. So we build kind of the network of this credit risk management. So, and this allows us to reduce the collateral requirements. And we think, okay, now closing the circle, and this makes it very attractive to the borrowers now compared to the DeFi and maybe some other solutions. So because they can borrow on the same asset basis much more. Okay, maybe
Alex,
next questions.
Yeah, Alex, any feedback or questions for Martin?
Yeah, so ETHLand and a few other platforms have been trying to do this for years, and they've had exactly the same problem of imbalance between borrowers and lenders. The DeFi guys have an imbalance, 3 to 1, 4 to 1, 5 to 1. That's why when you borrow, you pay 14, and when you lend, you only get 3.5%, right? So how you plan to solve that problem?
Okay, it is true. So, but let's look at it from a slightly different, a different corner. This question. The question is valid, but if you look this question from a different viewpoint, then the answer will be much easier. Now, this market is driven by the borrowers, not by the lenders. So, and if we are creating a system, a platform, which creates to the borrowers the situation that the capability to borrow is factor 2 or factor 3 than the others, we are getting the borrowers. So we have to attract the borrowers. Let's think how the Bitfinex did 7 years ago. So you have to attract the borrowers, the traders. Same strategy. Now, then on the other side, when the borrowers are there, the lenders will come. So that's the strategy. So I just wanted to say, let's look from slightly different viewpoint.
No, I understand. Mm-hmm. The problem. So like Celsius, for example, lends to institutions, right? So I don't have an imbalance, and I pay 80% to the depositor or to the coin holder. So it's very hard for a DeFi platform or a peer-to-peer platform to compete with that because it has that imbalance, right? So why not mix the two models together so you can provide a blended solution, and you don't have to rely just on peer-to-peer, because that model by itself has proven not to scale, right? No one has been able. I mean, I've seen platforms in 13 and then 14 and 15, right? 2017. Every year, somebody else tries to come up with it, but they don't play with the business model. They only trying to come up with
we play with the business model as well, because one feature I didn't have a chance to mention is these are fixed income funds. Now, traditional finance for fixed income funds, highly complex constructs. Now, on all platform, every user, every lender can define his own fixed income fund. So he puts up the rules, like how he wants to invest. And that's it. That's it. So the platform follows the rules, invests by the rules. So that's how the lender can then bring his fees in, his funds in. The borrower side, I spoke about this, but this is as well like, let's simplify the life of lender with these fixed income funds, private fixed income funds. That's how we call them. So, but I agree as well with this. I noticed that there is now a little bit, there's quite some discussion, DeFi, decentralized, and CeFi, centralized. Yeah, I think the right solution is more like these hybrid solutions, like
look,
like
even Maker, right? Even Maker has added USDC because they needed an anchor in the centralized world. So, so again, that's what we've been doing for almost 3 years, right? So I think it's clear what the winning project is, and pure DeFi is not necessarily the best thing. It's like getting 100% dark chocolate. No, 70% dark chocolate tastes much better. So having 30% centralization, 70% decentralization, you get the best chocolate in the world.
Exactly, hybrid solutions. Yes.
Cool. Guys, I want to get to Miko real quick to make sure we get feedback for Major at the Money Club. Miko, any thoughts and feedback for the Money Club?
Yeah, I mean, I you know, I'm not an expert in that particular geography, but you know, I think the overall principles that you're following are attractive. You know, I think the pitch is pretty compelling and hard hitting. The team is very you know, sort of hyper experienced in terms of the background and you know, academic backgrounds and whatnot. So, you know, I think it's interesting, and you know, I think from my perspective, you know, we do need to really look at that from the perspective of the. I think that, you know, as we know, you know, India has a Supreme Court ruling that allows for a little bit more liberalization of blockchain-based assets. So, you know, I think it's certainly interesting.
Awesome. Joshia, anything to add for the Money Club? Any feedback?
Yeah, I think there's a real need for such a solution in India, especially for the low income kind of population there. Just a couple of questions, right? How do you manage the fraud risk, and how do you manage collections in such a model?
Okay, so how we manage fraud is very simple. I mean, when we take a user, we don't put him into a big amount, a big money pool straight away. We put him into a small money pool. We underwrite him for a very small amount, and for that underwriting, we require very little data. It's as little data as 5 points on a form. Based on that, we put him into a small pool. He plays well. Then we start adding that data to his transaction history. If he's transacting well, we put him into a slightly higher pool. And with every transaction that he does on the platform, in the back end, what we are doing is we are capturing around 25 different attributes as to attributes like what is his average bid percent, how much money has he picked up on the platform, what is his weighted average transfer time, what is his risk factor. These kind of attributes we are constantly gauging in the back end to see whether this guy is going to be a disciplined guy or is he exhibiting traits of a defaulter. Now, if he's exhibiting traits of a defaulter, the algo automatically routes him to a, keeping him in lower amount money club or kicking him out of the platform. Or if he plays well, then we slowly keep taking him up to bigger and bigger money pools.
Right. And what about collections? How do you manage collections on that part?
So today we are not collecting any money at all. What happens is before the bid, there is no money movement. For example, if you are bidding for, let's say, $500, $500 is notional. And once the bid is happened, the winner is declared, the winner enters his bank account details on the app. The remaining members transfer fund directly from their bank account to the winner's bank account. And they come to Money. Yeah, they come to Money Club, enter the transaction ID, and there's a 2-point confirmation there. The sender, receiver confirm, and we know the transaction happened.
Awesome. And David, any additional feedback or questions for the Money Club? Dave, sorry.
No, so I was curious, have you looked in terms of the behavioral analysis, do you just look at data from their use on the platform, or do you look at data that you can find off platform in social media or other sources?
See, primarily the crux of our underwriting is the user behavior on our platform. I mean, if we are confident enough about the user with data on our platform, we don't look for any other data. We keep taking it off to bigger money club. But the moment an algo flags the user and says, hey, this guy is looking risky, the algo flags him, we call him out and we tell him, hey, you need to give us some additional data. Give us your CIBIL score, credit score, income statement, and give us your bank statement. Let us take a deeper look at you. And if we found you worthy, we'll take you back in and you can accelerate your journey in the club. But if we find that they are not worthy enough, we keep them away.
Got it.
Awesome. All right, everyone, thank you very much. Startups, again, thank you for the pitches. It's time to announce our winner as all the scores are in. And without further ado, I would like to congratulate our winner, the Money Club. Congratulations, everyone. Again, all of you founders did a wonderful job today. It was great, again, for you to get up here and share with us what you have. All the investors will be available to connect with afterwards, so we'll help you get those connections made as well. And as we do on each show, an edition of VC TV, as the grand champion gets to go first in terms of our quick roundup. So Major, you got 10 seconds to say thank you to everybody, but then quickly, where can everyone find you? So web address, et cetera, to find the company, and then we'll go around and do the same for the other startups. And we got one more big question for all of our investors before we head out.
Hey, thanks everyone. Thanks a lot for your time. And it means a lot if we are on a hyper growth journey, and if we get support from investors like you, I'm sure we're going to crack it. And there's a great business model at play. I'm going to drop in my email address on the chat. So if anybody wants to reach out to us, you can drop us an email and we'll be happy to start any conversations. Thanks.
Wonderful.
Thanks again.
Thank you. Martin, same to you. Quick wrap up, but where can everyone find you?
Hey guys, very many thanks for this event here. Okay, more information about Smart Credit on our website, smartcredit.io, and I will put my email as well on the chat. It's just martin@smartcredit.io. I will just write it up here. So thanks, guys.
Thank you, Martin. Philippe, same to you. Where can everyone find you?
Yes, thanks so much. I've just put it in our chat, Philippe@bit49.io. I've also put my phone number in there, assuming it's not going to go everywhere. You can visit our website, bit49.com.
Awesome. Thank you. And to each and every, again, thank you to all of our founders. For our investors, guys, last question of the day here. You're building in the space, you're investing in the space. The entire investment landscape has, I would say, shifted positively around fintech and blockchain over the past couple months. We're seeing more money put into this space, a lot more diligence being done on what's real, where things are being applied. But what is some of your advice that you have for founders or for other investors that are looking to start making bets in this space? And then as we close out and as you give your answer, please let everyone know where they can find you. Jesse, I know you've got to jump, so you can go first.
Yeah, absolutely. I mean, I think the crypto space is one where a lot of money has been raised without revenue models that necessarily have materialized. And I think we're going to start to see consolidation as a bunch of these companies sort of struggle to figure out their burn. So as you're thinking about your companies, focusing on that revenue model and making sure that the customer actually exists for what you're building and the customer is willing to pay. I think those two things are really key. You can find out more about Strix Leviathan at strixfund.com, STRIX fund.com. And I'm on Twitter at Jesse Proudman, JESSEPROUDMAN.
Awesome. Thank you, Jesse. Chris, same to you. Any advice for those out there, and then where can everyone find you?
We see this as the beginning of a movement, and we think it's about liberating interactions amongst human beings. And so all of these exciting projects are of tremendous potential, right? We don't know obviously which ones are going to go. As I said, our thing is about trying to be able to make a market on a price. As more and more people get to more and more assets that they're going to hold, they'll need to change the value of one price to another as things move from the traditional rails to interacting on a peer-to-peer basis. So we're getting ready to launch our new website, which will be Hehmeyer.com. It's spelled correctly on here, HEHMEYER.com. My email address is HEHMEYER@HEHMEYER.com. So I'm pretty easy to find. You can find me in LinkedIn, and I'm very grateful to have participated. It was really a joy and honor to be with all of you.
Wonderful. Thank you. Jean.
Yes, hello.
Same to you, sir. And where can everyone find you?
Well, my name is quite special, so just LinkedIn me or jjdandrieux@gmail.com, personal email. Won't leave you my phone number. I have already too many admirers, so happy to chat to everybody.
Wonderful, and congratulations again on the newborn, and thank you for taking the time today. We appreciate it while babysitting. Dave, same to you. Closing thoughts on that last question, and then where can everyone find you?
Yeah, I guess my number one advice for startups is to be frugal. And if you can raise more capital than you think, take it. Better to take it now and take the dilution now, because we just had a company raise a seed round. It'll last them 2.5 years. That's a good run room, because things could definitely get worse. And so planning on a next round is very risky. Best way to find me is at saunderscheme.com, spelled kind of how you think. You can reach me at dave@saunderscheme.com. Twitter is dedwards93.
Awesome. Thank you again, Dave. And Joshia, where can everyone find you? And again, closing thoughts on that last question about investment and preparing startups.
Yep, so everyone can find me at diamondasiaventures.com or on LinkedIn. My name is pretty unique, so it's pretty easy to find. The couple of advice would be, I totally agree, regardless of where you are at the funding stage now, it's always good to go out, continue conversations with your investors, and start preparing for the next round. And for all the startups there, I think the most important thing is to kind of being laser focused on unit economics at this moment, and really control the burn.
Absolutely great, and thank you. And Miko, close us out with the last thoughts of the day and where everyone can find you.
Yeah, absolutely. I'm very easy to find at miko.com, miko.com. That's my website. You can find all my social media out there. I just launched a website called safercrypto.org. So if you're interested in tips and tricks about online cybersecurity, definitely go check that out. In terms of kind of the broad investment, I definitely concur with everything that's been said about runway. Obviously, that's very primary. I just like to add that it's important to get the right investors. So I think in this kind of a time when people are really looking for anything, obviously, if you can find any money, you should probably take it. But obviously, signal matters, reputation matters, and value-adding investors matter. So you should, if you have the opportunity to, you should take signal money better than just generic money, and look for reference check your investors. Like, make sure you're getting into business with the right people.
That's great advice. I feel that's one thing that falls between the cracks most times as you're raising capital. You're so excited about the opportunity and so excited about the term sheet that may be in front of you that you forget to do the background check and diligence yourself, as has been done on you. So definitely sound advice, as is everything else that has been said, and nothing to add on my side, except this world has changed a little bit. We're doing more pitches, more conversations on a video platform like we are today. So be mindful of those presentations and how things may be changing, right? You're not in the room. Body language is a little different. Make sure you're conscious of time, and also that you go in depth in certain areas, but you still get the main point across, and be ready for this relationship development to take a little bit more time than it may have otherwise, again, because we're not meeting in person as often as we have been in the past. With that being said, to all of our founders, again, thank you very much to each and every one of you for sharing your ideas. To our investors, guys, thank you. I know I kept you a little longer out of your partner meetings. I'm sure you're okay with that. But nonetheless, we appreciate all the time and all of the insights. Everyone in our audience, thank you for joining in. A big shout out to Elena and the LA Token team again for making this all happen. I'm Kyle Ellicott, your host today, and this is another edition of VC TV. We'll be back here on Monday. Check out Guardtime, Celsius, and Stonegate Capital, or excuse me, Stonegate Global as well, if you get the chance. And we'll see you back here on Monday at VC TV.